All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Hope you had a fantastic weekend. Market up and at 'em here this week for a regular week of trading. Unlike last week, we saw Asia open up last night on a pretty sour note with the Chinese Shanghai Composite dropping more than 2% there. Some trade tensions between Japan and South Korea helped to drive things lower within the region. We saw S&P futures weaken during that time. In fact, you can see S&P futures, falling off during the Asian session. Bounced a little bit during the European session, didn't really go anywhere. And then, sold off into the open here this morning. We saw the S&P open lower, sell off a little, snap back a little since, and currently sitting, down about 15 points on the S&P. Now, if you're looking at the market and say, well, where's the market? Is it up or down? Yeah, the S&P is down, 15 points here, right? The IWM, though, small caps, almost green. Almost green here. But both have a very similar pattern, this kind of 4 or 5 day consolidation element in them. If you look at the Dow Jones Industrial Average, same type of thing, right? And so while, yes, varying degrees on today's move, ultimately last 4 or 5 days, same, pretty much about the same thing. No real indication of a whole lot, right? This morning, Morgan Stanley put out another piece, bearish on the market, showing that their exposure in equities is at a 5-year low. And look, I mean, if you're a strong bear, you look at that and say, yep, exactly. And it's justified because earnings are going to go down and because the economics are going down. The Fed isn't going to be able to rescue it, and no trade deal is going to rescue it. And you have a very easy to make bearish argument. And that's one of the things we've talked about for the last month. It is very easy to make bearish arguments in this market. The bearish arguments maybe have not been this easy in a very long time. And I mean 10, 12 type of years, right? That long. Bullish argument a little bit tougher, right? If you're a bull, you look at the Morgan Stanley piece this morning and go, yeah, okay, great. Here at a 5-year low of exposure, that means when the market breaks higher, you're going to be forced to buy in, and that's going to put more buy pressure in the market. Now, we've talked about the sentiments. With the market hitting new highs, sentiments are relatively bearish. And, what does that tend to mean? That tends to mean we have an explosive move up and coming here in the future, and I do expect that is the case. And, we'll be looking for a catalyst to drive it one way or the other. A jobs report isn't enough of a catalyst to drive it one way or another, right? Not in this market and not really in any market. A jobs report drives volatility on the day, maybe sometimes the next day, and then it's over, it's done, and the market moves on. Typically, Fed action, that will drive the market, to a much greater degree than what we see from a jobs report here. Okay, a few downgrades this morning. Apple downgraded to sell here this morning. Interesting piece on Apple. So we see Apple down about 2.3%. We saw Verizon hit with a downgrade. American Airlines hit with a downgrade here today. So a little bit of analyst action. Nothing too serious there. More Boeing drama, going on out there with the planes. And we've talked about Boeing, and it just needs some time to base out. And that's exactly what it is doing and what is happening on it right now. So let's go take a look at the challenge here real quick. Nothing that needs to be changed. There are no new signals. We have downside crossovers on stocks like Triple M this morning. Let me pull it up here. Has a downside 3-7 crossover on it, but is not qualifying as a downside trigger. GLD, gold, which has a downside 3-7 crossover, but it's the same type of read as what we had on the last 3-7 downside crossover. More consolidation indication than anything. Intel on the watch list has a 3-7 crossover, but not a signal. Bristol Myers. This was one that could signal this afternoon. I'm not exactly sure, but its consolidation component is not very high, so we could see that trigger this afternoon. And then Juniper has a downside 3-7 crossover on its gap down here this morning. So, no new signals, no cross-ups, no 3-7 cross-ups, to the upside there. So nothing there to react to signal-wise on the challenge. Now, we do have two positions in play. We have Disney and we have Under Armour here in play. Let's go take a look at them. Disney option right here is 565, so let's fill that in here. So Disney down a bit here on the day. Not exactly what we want to see. And then Under Armour up a little bit here on the day, and option at 237 here. So really haven't gone anywhere. Right? Yeah, really haven't gone anywhere here today with the market down. We have Disney down a little, Under Armour up a little. Neither of these stocks are at their stop levels, at their profit levels, or at their time stops. Disney is past their red time stop. Green time stop is tomorrow afternoon. So if it's still sitting in the green tomorrow afternoon, but hasn't hit its profit target, we'll be looking to take it and move on. Under Armour, same thing, but on the red side tomorrow afternoon. If it's red tomorrow afternoon, we'll pull that off and move on here from it. We do have cash sufficient enough to jump into another position. That's where the challenge is, and it's kind of been the last 4 or 5 days of just kind of grind. Here with the challenge, we've been grinding a little bit to the upside, so that's nice. But not really getting any real trend pops or anything like that. Yeah, Bank of America moved its 2 average true range, there, but didn't get anything. Didn't get anything afterwards. Okay, so that's the challenge here this morning, and that is, kind of just a few things on the market. I'm not making a whole lot of too much out there here so far. We're not seeing the metrics change or anything of that nature. Now, I titled this video, "What Will Happen and What Does It Mean?" And over the last month, many of you who have been part of our community in the past have jumped back on, and we're glad to have you and appreciative of you jumping back on. And we've made some changes, as you know and as you have seen. And the two most common questions since starting Trader Minute that have come in is, what is going to happen and what does it mean? Almost every question can be thrown into one of those categories. What will happen? What's going to happen with this stock? Jeff, what are you going to trade? Jeff, are you looking to trade? Jeff, what about this trade? Are you looking to exit? Where are you looking to exit? Oh, wait, the stock is doing this. What does it mean? Oh, the news is this. What does it mean? Most everything can be wrapped up in what will happen and what does it mean. And they're great questions, right? They're great questions, and they're great things, to kind of look at in the market. As we've gone forward and made some of the changes, and there are a few other changes coming in the next several months, we've made some changes focused around these two questions. What will happen? And, there's two ways to look at what will happen. One is with the challenge, and one is, being a crystal ball. And, you've heard me say many times in the past, I'm not a crystal ball. I don't pretend to be. Many of you watch certain stocks a lot closer than I do, trade them a lot more frequently than I do. I'm not a crystal ball. I can't look at news and go, well, this is going to happen because of this. I can't look at a chart and say, well, here's Juniper's chart, and it looks like this, so this is going to happen going forward. Can I break down the technicals? Can I break down the risk reward? Can I break down the fundamentals? Yeah, definitely have a knowledge of that. But that doesn't mean, hey, I know where the stock is going. All right. And so, great. Crystal ball, fine. All right. Most people get that. And, I don't get asked a whole lot of that in terms of, hey, what's going to happen tomorrow type of stuff, which, let's face it, I don't know. I don't know. But what is going to happen, or what will happen when it comes to the site, when it comes to the challenge, is something that we took very serious in developing the algorithm and developing the challenge format here. Because the fact of the matter is, many of us have lives. Many of you out there have lives, moving on, work, family, those types of things. You don't have time to sit in front of the computer all day waiting for Jeff to come up with a trade, right? And so, when it comes to what is going to happen, I can't sit here and say, well, there's going to be a trade this morning, and there's going to be a trade this afternoon, and there's going to be a trade this and that, right? But what we did is we put the challenge time frames. The trade time frame is 10:30 in the morning, 2:30 in the afternoon. Was there a challenge putting that together? Yeah, absolutely. Is it well worth it? I think so, because it really kind of takes a lot of that morning angst out of the community, takes some of that, uncertainty out of it. I've also put together the spreadsheet. And, the spreadsheet is simply designed to answer what will happen, right? I don't have explicitly written out, well, if X, Y, and Z happen, then A, B, and C will happen. But you just have to look at the challenge setup, understand the ATR method. You understand the ATR method, you can come look at a trade, and you know what decisions will be made if certain things happen. What the time stop is, what the price stop is, what the profit target area is, and I don't stray from it, right? I haven't strayed from it over the course of the challenge. I follow the ATR method and run with it there. So we've tried to kind of take out this question of what will happen. Not the question of what will happen with this stock tomorrow and will it go up in the next 5 minutes and will it go down in the next 5 minutes. Not some of that kind of meaningless stuff, but just the way the challenge is executed and way the trades are executed, and really trying to define what will happen here. But then we get to what does it mean? And perhaps one of the when I look and I say, okay, maybe where is some of the where is the problem with the challenge, right? Yes, we need consistency of gains and a consistency of what will happen, and that's for from a community standpoint. The algorithm has been built to deal with that. But this, what does it mean, is something that is continuing to come in, and I expect it will for a long period of time. And so I want to go and take a look at certain challenge decisions and talk about what does it mean. That way, as we go forward and as certain trades are executed, as certain decisions are made based on the ATR method, it's very clear what the meaning of that is. All right. And there are 6 periods of trade execution or things that could happen that we can derive of what does it mean here from. So let's go take a look at them. What does it mean, right? By it, I mean different moves in the challenge. 1, a trade signal. What does a trade signal mean? Trade signal doesn't mean the stock's going up, doesn't mean the stock's going down, doesn't mean that the stock's going up tomorrow, doesn't mean that the price of the option is optimal, right? Doesn't mean any of that. What does it mean? It means one thing. It means that the probability of trend, and defining trend as a 2 ATR move, is elevated. That's what it means. That's it. That's it. Doesn't mean stock's going up tomorrow. Doesn't mean the earnings are going to be great. Doesn't mean it's an investment decision. Doesn't mean Jeff likes or dislikes the trade. A trade signal says the probability of a trend, a 2 ATR move, is elevated. Simple meaning, right? It's very simple meaning. And then we go out and we enter a position. What does that mean? right? What does a position entry mean? Does it mean, oh, well, Jeff likes the position? No, no. In fact, you'll notice nowhere in this algorithm does Jeff's like or dislike get put into any of it. No room for it. But what a position is entered, right? A position is entered basically means what? The option value is sufficient to take advantage of a trend. Okay, that's it. Right? Option value is sufficient to take advantage of a trend. Some option values are better than others. Some are pretty ugly. Some are pretty darn good. Right? And we're not sitting there looking and going, well, this one's a perfect option value and this one's not. No, I mean, we traded Bank of America. Option value stunk. Right? But we traded it because it wasn't increasing the risk parameter. We went out and we did not trade a signal on Triple D. Well, the option value stunk and it changed the whole nature of the trade. Meaning, if we get knocked out without it hitting our price target, we could be down 60 to 90%. If we exit with it hitting our price target, because of the spreads on the option, we still could be negative on the trade. So no value in making that trade, right? No value in going after that. So entering a position, the only meaning of a position entry is that the option value is significant to take advantage of a trend. When we exit a partial position, right? We only do this when the price of the stock moves to average true ranges, right? What does that mean? Well, this is simply a money management decision. That's it. Nothing else. So with Bank of America, right? Bank of America, we bought Bank of America right here. Okay, we bought the calls. The next day, nice move up. The next day, nice move up. And what do? We pulled some of the position. We didn't pull some of the position because of the candles or because we thought it topped or anything, any new opinion, any change in signal, anything technical, anything fundamental. It just simply came down to, hey, we moved to average true ranges on the stock. We capture some of that gain and alter our position a little bit, and it's a money management decision dealing with exposure. We're still running with 60%. We still like the trade. We're still saying, hey, you know what? The odds of trend are still in our favor. Number 4, what does an exit at a price stop mean? That means the probability of trend is gone, right? The high probability of a trend is gone. Probability, if I can spell correctly here. That's all it means. So here's CSX, right? CSX, this is the one that stopped us out. We got in right here, right? The next day, stock went down, knocked us out. And what did that exit mean? That exit just simply meant the probability of a trend has gone away. Yes, it gapped up the next day, and then 2 days later it sold off, and then it's gapped up. And you'll notice it's consolidated. It has not trended, right? The probability of a trend is gone. It is changed from what it was with our entry. That's all it means. An exit at a price stop doesn't mean the stock's going to go a certain way. It doesn't mean, it can't go in our way. It doesn't mean anything except for this. That's it. That's the only thing it means. Exit at a time stop. We did this with Bank of America last week. We sold our partial position, and then, the time stop came in, and we were forced to sell the entirety of the position. Exit at a time stop, what does that mean? It means the probability of trend is lessened significantly. Doesn't mean the stock still can't trend, doesn't mean it still can't go up, but the probability of it trending is lessening significantly. This happened with us with Boeing, right? Here's Boeing. We get in right here. Great. Has a nice next day. We sell a partial position, right? Which just is a money management decision. That's all. And then we go and we hit our time stop. And we exit. That doesn't mean that Boeing's going up. Doesn't mean it's going down. It simply means that the probability of trend has changed. The probability of trend is significantly less than what it was on our entry. The last thing, number of positions for the challenge. What does it mean? Nothing. Not a darn thing. Doesn't mean the market's bullish. Doesn't mean the market's bearish. Doesn't mean Jeff thinks it's going to go up. Doesn't mean Jeff thinks it's going to go down. Doesn't mean a darn thing. It means that for each and every individual stock that had a trade signal, that had a position entry, that it has these meanings. And that's it. It doesn't mean that these are investment-worthy stocks. It doesn't mean that, hey, this is the top or this is the bottom. It doesn't mean this is a great re-entry point or a great exit point, right? It doesn't mean any of that. This is what it means. Where do these meanings come from? What are they derived from? Well, these meanings are derived from the data. The meanings are derived from over 600 trades over the last 3 years, driving data to where we can look and we can say, look, okay, right? This signal happens, and it doesn't mean we're going up or down. It doesn't mean this. It doesn't mean all these other things. But it means what? We see an elevated trend or elevated, over these trades, we see the probability of trend significantly higher. Right? We see that play out in the data. Well, when it goes through 3 days, hits a time stop, what happens afterwards? Yeah, there tends not to be a great trend. Right? Sometimes there is. Sometimes, the stock keeps going and it whipsaws, right? Those are going to happen. But the meanings are for what? For probability of trend. And so when it comes to the challenge, what do decisions mean? It simply deals with the odds of a trend. That's it. Simply deals with the odds of a trend. The only exception is when we enter a position. It just means the option value is significant to try to take advantage of that trend. A stock outperforming one day. Right? So here this morning, today, right? Under Armour's outperforming the market. What does it mean? According to the algorithm, absolutely nothing. According to the challenge, absolutely nothing. It's something we looked at in the data and said, okay, if it's outperforming the market or underperforming the market on one day, does it change the probability of trend? Does it change the odds of a trend? The answer was very clear. The answer was no. So yeah, it's outperforming the market today. Great. Definitely what I want to see, if I'm in a call position, but doesn't really mean anything. Disney's down 70 cents here this morning. What does it mean? Well, nothing. Right? There's no extra derived meaning here from that. And I understand, right? As traders, in our own experiences and candles and indicators and stocks green versus red and the market's red versus green, we try to derive things from it. But none of that is done here in the challenge. It's not what it's about. Cannot, with those types of things, creating a consistency of what will happen, very, very difficult. We sorted it down. We dumbed it down. We dumbed it down to the odds of a trend. Because when we look at the beauty of a challenge, when we look at past challenges and, the challenges that have gone and taken off and the challenges that have bogged down, right? The challenges that have bogged down have been in positions that are not trending and have held those positions for long periods of time. The challenges that worked very effectively, they were in trending positions and generally in shorter periods of time. Applying these signals and applying or developing a signal system to fit the challenge is not about, is this stock going to go up or down? It's not about what it's going to do tomorrow. It's not about any of that. It is about, does this stock have a good probability of trend? There are a few of you out there who have emailed and asked about, hey, can we apply other types of trades to these signals? Spreads, condors, those types of things, different types of option positions, selling calls, cover calls, those types of things. And the answer is, yeah, sure. Experiment with it. Experiment with it. I did a little bit of it, but nothing too hefty. Simply because the challenge is about long calls and long puts, right? It's not about trading spreads. But as you go out and you look, and as you try to look and say, can we apply other types of trades to these signals? Keep in mind these meanings. Because if you're trying to apply a trade that is looking for a stock to go flat, when a signal is triggering the odds of a trend are high, you may run into a few problems there, right? You may run into a few issues there with that. But at the same time, can you go and do some sort of vertical spread on the opposite side? Absolutely. And there's some, if you just take the data that's in there right now, and the trades that are in there right now, and if you were just to do vertical spreads on the opposite side, meaning if Procter & Gamble gives a bullish signal, you do a vertical spread on the bear side, trading for the stock to go up and, cashing in some of that premium. Does it work effectively? Yeah. So far with this data set, yeah. Am I convinced it'll work over a data set of 600? No, I'm not. Haven't applied it to a data set over 600. That wasn't our objective. But that is something that definitely could happen. Definitely could be viable. But as you go and apply different types of trades to it, please keep in mind the meaning of the different decisions. Right? As you kind of trade, as those of you who trade the challenge and then are trading, your own stuff, and the challenge is kind of a side thing. Just keep in mind, just because the challenge has 3 call positions doesn't mean you're wrong by having a put on this and that and that and this, right? It doesn't. That's not what it means. There's not that type of meaning. The meanings are what are here. These are the meanings, and that's it. That's where it stops. It doesn't go beyond that. This is something I've talked about in the past. I will talk about again in the future, simply because I find it to be very important when it comes to, trading the challenge, executing the challenge, and then, trying to do things off of the challenge here as well. Okay. Thanks for hopping on. Have yourselves a fantastic day. I'll be back on here with you this afternoon, and we'll talk to you then. Take care.